Good morning. This is Hyperwave. I'm Leah Wald here with Tyler Jenks, and we are going to talk about a lot of stuff today, but very briefly. Pretty much everything is falling below its phase lines. We're going to look at the NASDAQ. Tech stocks are obviously taking a hit. Bitcoin is obviously having some issues, and so a lot of interesting news. And if everybody remembers, tomorrow's a holiday, so actually the markets are going to end today. So I'll turn it over to you, Tyler.
Great. Thank you, Leah. We're going to keep this brief, but it's a very important vlog today. As you could tell by reading my tweets, I'm concerned at a number of levels, and we're going to get right into what those levels are. What Leah just said about this being a holiday, I've been so busy, I didn't even realize tomorrow markets were not open. That does not really affect the cryptos. It does affect GBTC, and we're going to take a look at GBTC. A couple of our followers have become very nervous that we're breaking down below the phase 2 line. I would agree with that, and I will pull up a chart so we can take a look at that. But the bigger question to me is we are going into a 3-day weekend, which for many people is a wonderful weekend, and but not for the markets. Markets don't like 3-day weekends, particularly when there's a lot of instability. And we showed 10 different NASDAQ charts several days ago showing the instability. So let's get right to it. We're going to just look at some charts, and I'm going to draw some conclusions. And most of you are not going to like the conclusions I am drawing, but they must be drawn as of today for a number of reasons. So let's go right to screen share, pull up where we usually start. This is the hyperwave of Bitcoin. This is where we are for the week, which ends this Sunday at 8 o'clock at night. We are now 1,000 points approximately below the hyperwave phase 3 line. It is a fair assumption that we are not going to be able to recover. However, we've got all of today, all of tomorrow, all of Saturday, and all of Sunday. We have done it before. Bitcoin has done it before on a number of occasions, right here, right here, right here, held on last week before succumbing this week. We dropped as low as 73.30 on this candle this morning, which put us a full 1,000 points below the hyperwave line. So what I'm saying today isn't necessarily that I'm throwing in the towel on the phase 3 line. I would be exultant if we get another round of buying that brings the price back up above the phase 3 line, which is sitting at 83.60 right now. In fact, I'll be laughing out loud and probably rolling on the floor if it happens again, because this thing has been so resilient. But let's call a spade a spade. We are breaking down relative to a lot of systems. The sequential trading system, Tone will be coming on shortly to go into details. He's been spot on in terms of calling this decline. Hopefully hyperwave will overcome that short-term weakness that continues and has been continuing for 4 months now, all the way from the top. But frankly, this is not looking good. Let's take a look of where we actually are. We've got a couple of pops here in the last 30 minutes. Let's take a quick look at the 1 hour. The 1 hour is trying to bounce off that 73.30, but not with much gusto. And when you jump up to the 2 hour, we're still have a negative candle, even though we're more than halfway up it. It's got to get going. It's got to get going right now, but it does have 3 full days. If I go to a longer period like the daily, I'm going to just quickly show you some other technical things that are important. One is the stochastic RSI is quickly becoming oversold below 20, but it is not there yet. When I pull up the stop and reverse points, we actually switched on a 1 day basis from bearish to bullish for a couple of days and back to bearish. But we're not far. 8,800 would give us another buy signal, way above where we are right now, but looking reasonable. On a weekly basis, we're not in the same time zone. We've got to get up all the way to 13,000 before we've really broken the back of this downtrend that started at the peak. So that's sort of the short, intermediate, long term for Bitcoin. Let's take a look at what I was saying about Bitcoin's evil twin sister, which is GBTC, the Bitcoin Investment Trust. I concluded a long time ago it was in a phase 2, which is this green line. We've had 4 breaks of the green line, and in each case we have closed back above it. Our problem today is because we've got a foreshortened week, which ends in just 5 hours, we are below that line on a weekly basis. And what that would mean in hyperwave parlance is GBTC needs to be sold, because we will drop all the way back down to the phase 1 line, which you don't want to know where that is because it approaches 0. It's down really below $2, and we're trading right now at about $10. So we're talking about no support other than this little moving average, which might hold it up for a bit. So GBTC is in a very difficult position. We've got 5 hours to rally back up somewhere fairly significantly above where we are. I would put that number somewhere around $11.50 on GBTC to remain above the phase 2 line. Now, the other thing that concerns me going into a 3-day weekend is what we have been talking about with the NASDAQ. I believe we're clearly in a phase 4. We bounced nicely off of one of these weeklies about 4 weeks ago, but then we've been coming back down, and we are sitting at 6,950 today. I've got the hyperwave line roughly at where the 50-week moving average is, which is around 6,600, maybe 6,500. Still, we're within about 5%. This is a much bigger story than the crypto Bitcoin story. By the way, a number of the cryptos that we looked at the other day, we looked at the 10 biggest. They are doing what Bitcoin is doing, which is testing phase lines, but not the phase 3. They're phase 2 phase lines, and they are not looking good this morning either, as you would expect. Okay, so I just very quickly am going to show you the 4 or 5 charts that I'm watching the most carefully relative to the NASDAQ. The first one is Apple, the largest of the NASDAQ stocks. Apple is trading at 169 this morning. You can see that's right about where my pointer is, very close to the line. And all I'm saying is if we were to get some real disruption over the weekend, these are vulnerable early next week. And since we're not trading tomorrow, people are going to have to wait 72 hours after today to be able to participate in these markets. Here we've got our chart of Amazon. Amazon's been taking a beating, is trading at 1402 this morning. 1402, which is basically right on this phase 4 line. No room for Amazon. It can drop down to the 50-week moving average, but that would be breaking this phase 4 line. I'm not going to get into are we really in a phase 3 or not. I'm simply assuming we're in a phase 4 and the phase 4 is being challenged on both Apple and Amazon. On Google, Google is trading this morning at 1031. I think there's still room here where the green line, the phase line is coming in around 950. I think Google looks fine, is not really contributing to any anxiety at this point, although it is going down. Facebook, on the other hand, is scary for fundamental reasons. We're not in a phase 4. We are probably just in a big phase 2, maybe a phase 3. Difficult to tell because it started late as a public company. But in any case, contributing to the worry about the NASDAQ, we are trading at 158 this morning. Below this red line, and I've got the green line coming in just around 145 to 150. So a little room there, but it is not great. Microsoft is trading at 90, and the green line is coming in somewhere around 85 to 82 to 85, about a 10% margin of error. So I'm going to wrap this up just by saying we've got a 3-day week ahead of us. Take caution if it makes sense to you to do so. Take caution in the cryptos if it makes sense, even though we've got a couple of days to go before we get to the end of the week. But GBTC ends in 4 hours and 45 minutes, and it is below its phase 2 line. I have exited all positions in GBTC over the last week for clients only because of what I'm seeing with both Bitcoin and GBTC. I would love to buy back in next week, but I'm not going to go into a long weekend this close to potential peril. And with that, thank you for listening, and I'm turning it back over to Leah.
Hello, and hello, everybody. Oh, man, always reverb. Tyler, we have a couple of really good questions.
Great.
Two money management questions, actually, and one about phase lines, which I think is interesting. Some people say that the closer you get to the line, the weaker it gets. Yet we talk about how the hyperwave lines hold very strong, Thor. So I will put myself on mute very quickly if you want to discuss that.
Yeah, it's a great question. My observation is that the the phase lines of a hyperwave are not the same as a trend line, even though they look the same. My observation over a number of years has been that a trend line does not, a phase line does not gain or lose strength over time by the number of touches, whereas a trend line does. And the only explanation I have for that is that each phase line builds on the previous phase lines. The number one phase line is the foundation or base of a potential hyperwave. The phase two line is cautious. It's moving up at a very reasonable angle of ascent and can go on for a long period of time. When it has proven itself, the phase three trend line begins. And now things get a little more speculative into the phase four trend line, but that's where all the money is made in 3 and 4. Finally, the entire structure falls on its own weight, which is 5, 6, and 7. But in each case, as you go down to the lower phase lines, they still represent the strength that they did before. And that would be my explanation of how Bitcoin has been able to hit on phase 3 over and over and over again and prove how resilient it is by bouncing. That does not mean it will do it forever, and maybe forever has come.
Okay, Thor's being quiet. Great. Okay, back to a NASDAQ question. Money moving out of the NASDAQ will potentially, this is just a great money management question that would be good for all of us to understand. Money moving out of the NASDAQ moves where? Commodities, other, etc.
No, basically things moving out of the NASDAQ, which is basically but not completely tech, will move into other sectors for protection. The utility sector, the consumer staples sector, things that don't do all that well during a growth kind of movement like we've seen. That's the first step that will occur with multiple hundreds of billions of dollars. Yes, some things will flow into gold. Some things will flow into cash or money market funds. But real money managers are not going to panic simply because one very overextended sector like the NASDAQ begins to correct. That will occur over time. I mentioned that the Dow Jones Industrials did not peak when the NASDAQ did all the way back in 2000. The NASDAQ went first, growth stocks went second, and then the balanced kind of stocks that are both growth and value went, which is the Dow and the S&P, months later. It's a process. It is not a point in time. Hyperwave is a point in time when it is violated. We're not talking about violations of the Dow or the S&P or value stocks or utilities, but we are talking about danger in the area of technology and the NASDAQ as a whole. That's the only comment we have at this point, and we'll have to see how the rest play out over time.
Great. Yeah, there's some fun economics around that of inferior goods and normal goods and Giffen goods if you guys want to play around with that. Great. Okay, last one. Tyler, do you sell on the close, intraday, end of the week? We talk a lot about end of week by being how we understand the trend lines, etc. You want to just speak to that?
Yeah, what I do and what you do are two completely separate things for a lot of different reasons. But let me just quickly walk through the options. I do not mind. In fact, I love jumping out of a position because I see that it has become risky only to be proven wrong. I love that. And I do that all the time. I've done that for years and years and years. And what that means is in a strong market that keeps going higher and higher and higher, I will lag that market. I love that. I don't care at all. Because what I am doing is I am protecting assets at every point in time. I don't want to take losses. I am an absolute return kind of a manager that wants people's original capital and assets preserved. That means I take extraordinary caution, which means I get out before my signals tell me to get out. Usually when a signal says get out, it's too late, because at that point, everybody is trying to run for the door. So depending on what your basic approach is to your money, you have to make your decision. What I will do in these vlogs is I will point out the strengths and the weaknesses of various tools that will allow you to just take a look at your own portfolios and make decisions. What is the smartest thing for me to do right now? If you're the kind of person that punishes yourself for making a bad decision because you bought 2 weeks ago and therefore you don't want to get out and assume a loss or even a small gain today, because that would say you made a bad decision 2 weeks ago, I understand that. There are a lot of people that feel that way. I am not one of them. I would rather take loss after loss after loss that's very small than end up taking a large loss. And I would very much prefer taking 3 small losses and 1 gigantic gain. And that's the way I look at money management. And that's the way I'm approaching all of these. Each of you must choose for yourself what to do. I'll try to give you as many signals as I can.
Yeah. To nerd out for a second, Tyler, if you feel the same way, this always goes back to the fun stuff of behavioral economics, at least that I studied, right? And you too. The herding effect is also what it's called, or the Keynesian beauty contest, if you guys know what that is, where you determine that the markets often, well, and also just in economics, people have 3 standard deviations away from what they actually think about stocks. So ensuring that you're getting out before that, let's say, bank run, Tyler is able to, and in general, a good, money management strategy that you're discussing is making sure that you're pulling the trigger before all of this effect happens, and is able to, through, irrational exuberance or the animal spirits of Schiller, start affecting those markets and start, yes, Tyler, no, Tyler.
No, that's exactly right. It's a very, very powerful force. And Tone put it very well last night. It's called capitulation on the downside. On the upside, it's called exuberance, where it just keeps going up and up and up, and people are pulled into it at higher and higher prices. And people are pulled out of it at lower and lower prices, just the opposite what you want to do. You've got to really think for yourself in terms of what's going on and understand what tools you have available to measure these things. And don't be embarrassed by your decisions. Don't be embarrassed about taking a loss, particularly a small loss. That's what stops are for. They override emotion. You know it going into a trade, how far you're going to allow this to go against you. That's a different question than when do you buy. If you're in cash, like I am, have been for months and months in the crypto world, only because we were in a long-term downtrend. I don't want to own a long-term downtrend. And I will be patient getting into what looks like a new uptrend. I'm not going to try to guess the bottom. But there are ways to get into a market that's been going down for a while, or one that's been going up for a while, before you get a signal. And we will talk about that in a separate vlog, because it's an important concept. You don't have to wait for a technical or a fundamental signal to take place, or a news item to take place. If you know where you are and where your asset is relative to your level of confidence, you can take action prior to things happening and just walk away whistling, which is the right way to do it. And I think with that, we will conclude.
Absolutely. And just to address the live chat, sorry, I went really quickly to explain as well. Animal spirits is really against the conventional norm originally of economic theory, which assumes that economic agents are strictly rational, that we want to but obviously that doesn't take into account asymmetric information, all these other factors that I guess we can discuss another day. So even Keynesian economics caution that, fluctuations are often, due to behaviors, and that we are irrational, and that we get excited or we get worried, and this will affect what we buy or how the stock markets react. And so he did call that animal spirits. So just saying. And as for when I mentioned very quickly about the beauty contest, this is a kind of fun one, and then I will totally end it with my nerding out. So the Keynesian beauty contest, which I may be totally getting wrong right now, it's just very simply what it says is that when you're determining, beauty, and you have to pick, I'm like summarizing this experiment, but picking the most beautiful person is not who you think is most beautiful, but it's who you think that, the person next to you thinks that everybody thinks is the most beautiful, which is why it's 3 standard deviations away. So in the end of the day, exactly what we're talking about, that, it is this herding effect of what is everybody thinking about the markets, which is why very often, everybody gets very caught up in news, and the noise of news, and thinking that, is just making everybody and all the prices fall and drop and rise. And there's validity to that, but we can go into that another day. But that's just to explain those theories that I mentioned earlier. So with that said, we may come back to you fairly soon with more vlogs with the price action on what's going on at the end of day close. Again, reiterating that tomorrow's a holiday, so the markets, at least the NASDAQ, are going to close today. Still Sunday for Bitcoin, and that's all on me. Tyler?
Great. Thank you all very much. We will be following up maybe today, definitely tomorrow. And as we get close to Sunday night, we will follow up again. Thank you all. Bye-bye.
All right, everybody, good luck trading in this environment, and chat later. Thanks so much.